I'll bring the meeting to order. Welcome. This is a meeting of the Audit Committee. Public are welcome to attend, but are not able to take part in the debate. No. There is no fire alarm scheduled for this evening's meeting. If the fire alarm does operate, please leave in an orderly manner through the signed routes at either side of the auditorium and assemble outside the Wetherspoon Public House, the Lynn Cross. Could I ask the officers and auditors to introduce themselves, please?
Thank you, Chair. Hassan Rohiman, partner at EY, responsible for the external audit.
Kirsty Nestle, corporate accountant.
Julian Shufka, group accountant.
Reen Burton, Chief Internal Auditor.
Jacqueline Case, performance management officer.
Samantha Wilson, Head of Finance and Performance.
Dominic, Director of Resources.
And Liz Fennick, Democratic Services Officer.
Thank you. Have we any apologies for absence?
I haven't received any apologies.
I know there's one position missing. Yeah. Okay. The minutes, I take you've all read the minutes. Can we agree that take these as read now? All actions, there's no open actions on there at all. Okay. Right, thank you very much. Agenda item 3, declarations and members' interests. It's just a little reminder that declarations of interest must be made at each meeting. It can't be carried over. So if you made a declaration of interest in the past, it's got to be remade at each individual meeting. Is there any declarations of members' interests? No, thank you. Right, announcements. Agenda item 4. First of all, I'm going to just give you a little bit of background of what I've been doing. I attended a course, the LGA Roles and Responsibilities of Audit Chairs, on the 25th of September, followed on the 29th of September by LGA Finance Without Numbers, an Intro to Local Government Finance, and also attended a course on the 30th of September held by the CFGS, titled Shades of Grey, Audit and Scrutiny. So that's interesting meetings. Right, now going to the Pacific meeting announcements. Members will note that item 6, 2024-25 statement of accounts, in light of the amended set of accounts that you've been provided with now, are proposing that recommendation I is altered to read to approve the 2024-25 statement of accounts as contained in the addendum, which is the report you've just received. And also, members will note that item 10 on the agenda relating to risk management contains an exempt section. Please be mindful not to disclose any information contained in this exempt section. It is my opinion we do not really need to go into this exempt section at the present time because there's been no change from the last audit meeting. So, but if you do want further information, we'll have to go into the exempt section, which means a lot of faff turning off all the equipment to make sure the public are excluded from the meeting. And also, item 12, capital strategy. Please note that the revised agenda front page was circulated to you after publication to show the 4 correct recommendations published in the main report in relation to the capital strategy. That should be all in front of you now. Copies of the revised agenda have been provided, as it says on here, on your desks. Okay, we move on now to agenda item 5, which is the external annual audit results reports. Can I ask the external auditor to give this presentation, please?
Thank you. Thank you, Chair. I'll just now briefly take you through our audit results report. Just before I do talk through the executive summary, just want to outline that overall our audit is nearing completion. and we'll be in a position to have all of our planned procedures completed at the end of audit, which is an improvement from the prior year, and that's reflected in Appendix B, where we summarise the assurances gained for our 24-25 audit, and also comparing that to 23-24. We will be having said that, we'll be kind of issuing a disclaimed audit opinion, and the reasons for that are kind of summarised within Appendix A of the report, where it outlines the progress to full assurance. So that said, I'll just take you through briefly take you through the executive summary. So on page 6 of the report, we outline a scope update. The reason for that is when we get the updated draft financial statements, we use those figures to recalculate our materiality levels, and that has resulted in a slight increase to 1.65 million from what was included within our audit planning report. Also outlined on page 6 is the status of our audit. So just going through the first 3 of those bullet points in turn, we're just awaiting one lease agreement. In respect of the car park valuation adjustment, management have been providing us with an updated summary, which is included within the updated accounts, which are on the agenda for today. So the team, well, that's Sunny, the engagement manager, is currently working through that. There is, you'll see in your statement of accounts, there is an adjustment following on from the car park valuation, which isn't included in our audit differences. So the reason for the amendment is that it relates to change in the income levels and the yield which is used to calculate the valuation of car parks, and approximately a change in valuation of £5.5 million. Moving on to page 7 of the executive summary. We've got a responsibility, as well as giving an opinion on financial statements, we've got a responsibility for reviewing the arrangements which the council has in place for securing value for money, in line with guidance issued by the National Audit Office. In planning the audit, we didn't identify any risks of significant weakness in arrangements, and having completed our work, there are no significant weaknesses in arrangements which we will need to be reporting to by exception, so that's a good position to be in. The audit differences, there are 5 unadjusted misstatements, which further details of those are outlined in section 5 of the report. In total, those unadjusted misstatements, they just, in terms of your bottom line, there's just a £90,000 impact on the bottom line in relation to usable reserves, and management have decided not to amend for those particular differences on the basis of materiality, which we're kind of satisfied with, but we will be asking for that, the reasons for not amending, to be included within the letter of representation. In addition to the unadjusted differences, there were other amendments which management have made, and they're summarised there on the executive summary, relating to housing benefits, short-term investments, IFRS 16 lease liability, and the incorrect classification of discretionary council tax support scheme. And again, there are further details in section 5 of the report, as well as a number of disclosure misstatements which management have agreed to amend. We've got a responsibility to, in relation to the annual governance statement, to review the annual governance statement and to assess whether it's consistent with our knowledge. So in the annual governance statement is consistent with our knowledge, and we have no matters to report as a result of the work which we've undertaken. In relation to the whole of government accounts, where once we've completed the audit, then we'll be reviewing the work on the whole of government accounts, and then after that we'll issue the audit certificate. Page 8 of the report outlines the risks and areas of focus which were included in our audit plan and provides a summary of the status of our work. There's more detail within section 2 of the report for each of those areas, outlining the work which we undertook and the conclusions that we've reached. And then just on page 9 of the executive summary, just highlighting in terms of control observations, there were 2 control observations which we made this year relating to journals and the derecognition of assets. Further details of those control recommendations are set out within section 6 of the report, together with our follow-up of prior recommendations. And finally, just want to, in terms of executive summary, just move on to page 10 of the report. So this is a new table which we're including this year, and it highlights factors which the council should consider for looking to facilitate the efficient execution of an audit. So we've highlighted there a number of factors, and these are kind of factors which are important in terms of the resetting the local audit market, which members will be aware of has contributed to the current position. Not sure what that hissing sound is.
Chair, I'm terribly sorry. May I ask the external auditor to speak up a little bit, because we have some noise in the room.
Yeah, sure. Okay. I was just moving on to page 10 of the report. Oh, it's gone now. Anyway, so page 10 of the report, where it highlights factors that impact the execution of the audits. There are a number of areas there, and we've assessed the arrangements as being either effective, requires improvement, but there are none in the red category, and also provide an explanation as to the reasons for the assessments which we made. I'm not proposing to run through the rest of the report in detail, but happy to take any questions which members may have.
Thank you. Members, if you've got questions, please.
Yeah, I guess one from me, just in terms of the actual disclaimed opinion. So I think my take on it was that there was good cooperation between the council and EY on this one. So I guess somewhat of a newbie coming into this as well. I just want to make sure that was clear in the minutes, that there was cooperation and teamwork to get the report in the state that it is.
Yeah, I can say there has been a good cooperation between the audit team and the finance team.
Yeah, thank you. I've got just a few questions. If I go back to page 6 of your report, I don't know what it is of the papers. Let's go back to page 6 myself. Sorry, I've just not having a paper copy sometimes is. I can get back to it. Yes, you talked about status of the audit, and one of them was awaiting an updated going concern assessment from management. Have you received that yet?
Yes, it has been recently received, and don't anticipate there being any issues in relation to the going concern of the council.
The next one, page 7, which was to do with the housing benefit not being netted off correctly. I'm assuming that was just a reporting issue rather than actually anything else.
So that was a difference in terms of the accounts, and an amendment has been made to the accounts for that.
Yeah, fine. If I then go to page 8, and I suppose this is a theme that goes on to a number of the other pages as well, and that is about page 8 specifically about the car park revaluation, but it seems to be on page 14, and then further on there seems to be a number of questions about valuations of land and buildings and your risk assessments of the way they're being performed and the errors that you found. Do you think these errors are something that we should be concerned about?
I think in terms of the valuations, the council does engage its own internal expert to provide valuations. we've in terms of undertaking our work, we've engaged our own specialist to review the work of the council's valuer. In relation to car parks, we've identified some issues in terms of their methodology, as I said, particularly relating to the income and the yields that are used in relation to those valuations. There has been a revision to the valuation basis, which have then resulted in the adjustments which are in your updated financial statements. I think it's always an area where we do see issues in relation to valuations, and it's important to ensure that the valuer is properly adhering to the correct assumptions in coming to their valuations.
Is this something you see across the piece with local authorities, or is it been something you've seen as an issue here?
It's dependent on the valuers which are engaged. There are some valuers where we don't really have too many issues in relation to the valuation methodology that they apply. There are other valuers where we do kind of question the valuation methodology that's applied. In respect of the council's valuer, they probably sit in the latter bucket.
Okay. And then I suppose the other point I was going to make on page 10, which was factors impacting the execution of the audit. And obviously there's quite a lot which requires improvement. And when I look through it, actually what it says to me, and I don't know about whether you'd agree, but I'll comment to the chairman, what it actually says to me, is there an issue with resourcing in the team? The finance team. Not the audit team, but in the finance team in being able to deliver it.
I'm not aware of any issues with resourcing. And officer aren't.
Question?
Yeah.
To officers?
Well, I addressed
I
it
don't know.
through
Is
the
it an
chair.
observation or a question?
It's an observational question, yeah. I just wondered if you was concerned about the resourcing in the team.
No, I don't think I am. I think the context is important here, isn't it? We've had a couple of years worth of disclaimed opinions, and the timing of those opinions is late, isn't it, each year? So when you're still doing stuff in February to sign something off, because let's remember this is an audit situation, not one of our own making here, that shortens any time period we have to do things. And ideally, we'd like a nice long run-up, so get that opinion done in November, sort out your budgeting, and have a good long run-up at the close down year end and then the accounts. And the more time you can have there, the fewer errors you're likely to make, because you're more likely to check things more thoroughly. And when things are crunched up, concertinaed up, you get less time to do that. There are more mistakes in there than usual. We've got to, of course, compare this to other authorities, and other authorities will have had, orange and red. Yeah, no, yeah. Absolutely. But previously, we've been a bit more green than this, but I think that's mostly down to the circumstances that we have faced. But of course, every finance team is trying to do more with less. So there is a little bit in there of, it'd be great if we could have 2 more accountants in the team, but there's a cost implication to that. So where we are at the moment, I think we're doing pretty well.
Okay, no, that's fine. That's what I was trying to draw out. Thank you. And that's really one of my questions. Thank you.
Quick note, members, please raise your hand before you ask the questions, because to make sure I can get to those who are, put their hand up first. I've got a question for the auditor. It's basically about the fees. I note on their page 36, you've got the scale fee for the work, and you've got the fee variation, which isn't listed, but you've listed all the work undertaken. When do you expect to have some indication of how much that's going to be before going to the PSAA? And can we have sight of it before submission to the PSAA, please?
Yes, Chair. once our work is concluded, we'll be communicating with Dom as the Section 151 officer, outlining any fee variations, and then after it's gone through Dom, we'll share it. It can then be shared with the committee before being submitted to the PSA.
Councillor Hogman.
Thank you, Chair. Obviously, the car park discrepancy is one of the largest discrepancies in here. Can I ask why it wasn't picked up last year? Were EY not the auditors for us last year, and why it sort of snowballed, I guess, and we've now got the adjustment over 3 years? Thanks, Chair.
Members may recall, and it's outlined within the Appendix B, that last year we completed a lot of the procedures which we planned to complete, but one of the areas which we didn't complete related to valuations. There was the backstop date of the February in terms of getting the opinions out for the 23-24 audit, and we outlined in our reporting that we hadn't completed the work in relation to that particular element. So that's the reason why it's then kind of been picked up in more detail this year.
Any further questions, members?
Oh, just one quick one. So when do you expect to complete the remaining procedures for 24-25?
So very much in the final stages, looking to get those completed and having the opinion issued in the next couple of weeks.
Okay, great. So it should hopefully alleviate some of the concerns that Dom had
definitely
mentioned.
before this side of Christmas.
Great, thank you.
Any further questions, members? Okay, thank you, Hassan, for your appearance here and answering the questions so well. Thank you very much.
Chairman, you need to note and be satisfied with the
Yeah,
contents.
just put that in
Sorry.
really. Yeah, we have, we're required to note and state we are satisfied with the contents of the report. Are you all agreed? Thank you very much. So now we move on to agenda item 6, the statement of accounts, which Sam Wilson will present. Thank you very much.
Thank you, Chair. I would like to start by thanking Hassan, Sunny and the team at EY for all their work throughout the audit. An informal briefing was held earlier today to discuss the accounts and answer any queries. The slide deck from this briefing has also been circulated to the committee. Committee members will note that an addendum has been added to the agenda following changes made to the accounts between publication of the papers and the committee date. The accounts for approval are those contained within the addendum. I'll try not to repeat too much of what Hassan has just gone through, but I have a few items to go through. So as a result of the audit findings on the car park valuations, it was been necessary to include a prior period adjustment to both 22-23 valuations and 23-24. Because of this, there is a third balance sheet, which is the 2022-23 balance sheet within the accounts, and full details of the adjustments are contained within note 4 of the statements. The further audit findings include a misclassification of IFRS 16 lease liabilities of 6.1 million within the balance sheet. There was £500,000 paid through council tax support scheme incorrectly disclosed within lower tier funding in one of the notes. £1 million of housing benefit income received from residents in council property not being offset with the expenditure incurred, and a short-term investment of just over 1 million incorrectly classified as a long-term investment. The audited statements have been updated to reflect these changes. There are 5 unadjusted errors with the late addition of a valuation adjustment mentioned by the external auditor. The reasons for not adjusting these are outlined in page 61 of the pack. Last year, we provided updates, so this year we provided updates to the auditors on the 22-23-24 control environment findings, and there are two further findings in the 24-25 audit. These are the approval of journals, which management will consider, and the disposal of assets, which will be incorporated into the close down timetable. The audit also identified minor issues with the annual governance statement 2024-25, approved by this committee in June. The changes we have made to the AGS before you are additional wording added to include reference to the Chief Internal Auditor's opinion of reasonable assurance for the year. The addition of the internal audit finding for housing tenancy strategy as a minor governance issue, and the inclusion of the word conclusion within the certification and conclusion subheading. An updated AGS can be found in Appendix C. Are there any questions from the committee?
Members, have you any questions? No, okay, thank you. Okay, so we are recommended then to approve 2024-25 statement of accounts as contained in the addendum, to approve the letter of representation, and to approve the updated annual governance statement. Do I have a seconder, please? Councillor Emery, thank you. Are you all agreed? Agreed. Thank you very much. So we'll now move on to agenda item 7, internal audit, the quarterly progress report. But before we go into that, just to make a statement that myself as the chair had a prior meeting with the chief internal auditor, and I'm content in regard to the independence of the internal audit function and that it is suitably resourced. Reem, if you could give us your report, please.
Thank you. So, as is obvious from the title, this is a summary of all of our work from the second quarter of the 2025-26 financial year, during which we finalised 4 audit reports, all with a reasonable assurance opinion. Those 4 audits, there's a summary of all the findings in Appendix A. I wasn't going to go through those in detail, but what I was just going to highlight is the general performance of the audit plan, delivery of the audit plan. We are now back on track. You may recall last time we were slightly behind, but we have now delivered 52% of the audit plan. So I'm confident that we can deliver the whole plan within this financial year. That's against delivery of days of 48%. Partly that will be some audits have come slightly under budget, partly that will be timing. But overall, I'm really happy with our performance. I hope you are too. The changes to the plan that I just need to bring to your attention, we have cancelled an audit of domestic food waste, which was carried out actually within the last year and received an opinion of reasonable assurance. We've kept on top of that project just through normal catch-ups with management, and we're happy that everything's running to plan at the moment. And so we felt it wasn't the best use of resources to carry out a further audit of that project. We have, however, added another audit in its place of the Capitol Theatre roof procurement. That's separate to an audit of the Capitol Theatre project. And so we'll be reporting on that hopefully shortly. Since writing this report, we have issued another 4 final audit reports for alcohol licensing, building security, the capital programme and general ledger, and others are in the works as we speak. That's really it from me at the moment, because I'm happy to take questions.
Members, have you got any questions, please? Councillor Emery.
Thank you very much for that report. Could you just explain why you consider it necessary to do a further audit of the Capitol Theatre roof procurement over and above the existing audit you're doing in respect of the Capitol Theatre?
Yes, so we had the Capitol Theatre refurbishment project on the audit plan this year. That was fine. We done it last year as well, but it's a major project that we should look at. When we started looking at the roof works, we realised it sort of slightly sits to the side of the project. It's something that was on the maintenance plan anyway, and it was a fairer approach to actually split those out, because I suspect they will come up with different audit opinions. And it was to make sure that we sort of didn't demotivate any project team and we didn't give false assurance on either of those areas, because both are quite high cost areas. So we split them out.
Thank you very much.
Councillor Dennis?
Thank you. The domestic food waste one, have you cancelled it altogether or have you deferred it?
We've cancelled it, but we will keep an eye on it. We catch up with managers very regularly, so we are aware of the progress being made. And purely because it's already been audited, nothing has actually changed in terms of the governance and the management arrangements. So we're satisfied that there's nothing we can add at this stage, and it's not. We just don't think it's the best use of our time given the risk profile. But we will keep an eye on it, and if it needs looking at again, then we can always add it back into the plan.
Any further questions, members? Member Dave Cornfield.
Yep, just a quick one, just on the open issues as well. So noted that the high rated issues are all closed on time. Is that still the case? There's nothing past you that's high risk?
Yes, all high risk actions have been implemented.
Perfect. And I think there was just one medium rated that was a bit late. When's that one due to close? And should we be worried about that one?
No, it's not actually a super significant one, but we are working with the service at the moment to make sure it's updated. It's actually, just to be more specific, it's to do with training records. It's not that training isn't happening. It's simply that the recording is slightly inconsistent, so it needs improving a bit, but it's not one that fundamentally weakens the control environment.
Great. Thank you.
Any further questions, members? Okay, thank you very much, Reem. Thank you. We are asked to note and consider if any further action is required in response to the issues raised in the report, and to identify potential items for inclusion in the internal audit plan. Do you have any suggestions on any additional items? So we can note the report. Do we all agree? Thank you. We'll now move on to agenda item 8, the SIPFA Code of Practice for the Governance of Internal Audit, UK Local Government. And I believe it's the Director of Resources who will be presenting this. Thank you.
It is indeed me. And you might be wondering why, because it's all to do with internal audit. But actually, this is more to do with, I suppose, ourselves assessing the internal audit practice and how the audit committee interacts with that. And we've done a sort of a self-assessment there against the new code of practice that's been issued. That code of practice is here to help support authorities in establishing their internal audit arrangements. You'll see from the review that we've done, there's an action plan there of some of the points that we perhaps need to polish and pick up. The suggestion is that we do that as part of our annual review that we would do anyway of the audit committee, and feed that in at the end of the year. And we will make sure that we will need to do this annually henceforth.
Any questions, members? Okay.
Well, just a very quick one, just the page 162, it was just the date by which the audit committee was due to complete its self-assessment. So I believe that's end of financial year, but it'd be good to have an actual date.
Yes, that's probably a bit of an oversight on our part. We should have put an action by date in there, and we will do so next time. So thank you. Yeah, but it will be the end of the year.
No further questions from members? No. Okay, so we're asked to note and be satisfied with the contents of the report and action plan, which is in Appendix A. So do we all agree? Agreed. Thank you. So we now move on to agenda item 9, which is the annual governance statement action plan. And this will be presented by Jack over there. Thank you.
Thank you, Chair. So page 173 of your report packs provides an update on the annual governance statement action plan. So within that action plan, we had the new constitution that was fully rewritten and adopted in April 2025. Initial training has been delivered. and a formal 6-month review began in October to assess effectiveness and identify any changes we might need to make. Work to embed the new procurement regulations is now complete. All the legislation has now been embedded. Training has already been delivered, and we have an ongoing training programme starting in January. And finally, we had cyber security awareness. This remains our high risk. Training and phishing exercises are ongoing, with further support planned for councillors and new staff. Our HR team are reviewing additional materials, and induction processes will be strengthened. Any questions on that one?
Any questions, members? I have one minor point, really, which is aimed at democratic services, I suppose, that the new constitution isn't present in the members' room. They've still got the old constitution in the members' room, and I think we need that updated, if possible. Thank you. We're required to note and be satisfied with the contents of the report. Do we agree? Agree. Oh, thank you. So now we move on to item 10, risk management, the quarterly update. And this will be presented by Jack again. Thank you.
So the Council's risk register at month 6 is listed on page 179 of the agenda pack. Currently, we have 9 high risks and 10 medium risks on the corporate risk register. The high risk areas include budget pressures for 25-26 due to the reduced income and rising costs, and the risk that government funding for 2026 may fall short of assumptions in the MTFS. An update on risk 001, which is the benefit subsidy claim. The housing benefit audit for 24-25 is being signed off this week, and it looks like we'll be under the lower threshold, so won't lose subsidy. This should reduce the risk a little in this area in future, and we'll need to revisit our assessment of this risk before the next committee meeting. The adoption of an up-to-date local plan also remains a high risk. Again, an update on this risk. Our letter to the inspector has now been acknowledged, and we're waiting for the outcome of that. And again, members will be updated accordingly following the receipt of the response. The risk rating for the capital refurbishment project and local government reorganisation, along with loss of income in Revers and Bens, also remains high, and we continue to list 1 exempt risk. We have 1 new risk added to the risk register. This is 022, and that's in relation to water neutrality following Natural England's withdrawal of its position statement. The risk rating for 004, which relates to government funding, has remained red, but the score has improved from 25 to 16 due to a more optimistic financial outlook. Again, we'll revisit this after the provisional settlement during December. And then finally, to draw your attention, we are waiting for the government's decision on the quality of major decisions KPI threshold for the period of April 24 to March 26. If the threshold reduces from its current 10% to 5%, that could be a significant risk for the council, and as such, we would add it to the corporate risk register. The current forecast for that period is 5.68%, but obviously a few more lost appeals could bring that level higher. Again, we'll update members once we know the outcome of what the threshold is going to be.
Thank you. Members, have you got any questions? Dave Cornfield, please. Oh. Well, Councillor Dennis first then. Okay.
Thank you. I was slightly bemused to see that risk 18 is higher than 4 and 19. I'm making that as a bit of a sweeping statement, I suppose, in terms of, I wouldn't have expected it to be higher unless we're saying the project's failing disastrously.
Thank you. I didn't know which number it was. The theatre will be about, it's the financial loss we would ensue if it fails.
There's a certain amount of reputational damage there if we get that wrong. Plus we've had a sort of a false start already, haven't we? Where the contractor came back to us with a much higher value that we had to sort of pause and re-evaluate what we wanted to achieve there. There is a risk, of course, whilst they are still undertaking this, I think they call it stage 4 of this REBA, where those numbers should harden, that could actually, increase or decrease depending on what they find and come up with as they delve more into the detail. So it is red at the moment. When that number comes back, and hopefully it will be under the budget, that risk will be re-evaluated and could well decline.
Right, okay. And then if I just look to 11, if you don't mind, which is the cybersecurity one, which is not just about obviously financial risk, but that's also business continuity, but it's also about reputation as well. In light of what we're seeing out in the business world, and actually the unknowns that we know really they're not unknowns are going on in the rest of the non-business world, is that amber position really realistic?
Well, so this is one we have discussed at length in our sort of risk meetings that we hold internally as a board. And yes, you're absolutely right. There was something I think announced today in London as well. Some public sector authorities there being targeted. We tend to peg ours to the sort of the national cyber alert level, and when that increases, ours would rise accordingly. At the moment, we feel, although you're right, it is just a matter of time, that we are fully aware of that and therefore on top of the risk. So for us, yes, it could happen, maybe it will happen, but we're doing all that we can to try and avoid a situation occurring. So is it red? Is it amber? We feel like we are mitigating as much as we can, being fully cognizant of that risk.
Yeah, I was going to say mitigate as much as you can, but there is no full mitigation, so let's face it.
There's no guarantee.
Members, any further questions on this issue?
Diane.
Oh, sorry, Dave.
That's okay. That's okay. So we've got 4 high-rated risks that are above the current risk appetite. Now I know some of these are somewhat out of your hands, but do you expect those to come within appetite, and are there any further actions we need to take to make that happen?
I think that's really dependent on the risk. Some of them, you're right, they're so far out of our control. We can mitigate to a certain level, but I think until we get settlements through, it's really hard to bring that into the risk appetite.
Okay, so we're happy that the risk appetite is at the right level. We just have to live with that being above it for the time being.
We do, and some of these will change, won't they? So the ending of water neutrality will play out over time, won't it, over the next 3, 6, 9 months. And the local plan will take shape as a result of that. And that will change the risk factor there, hopefully, go down. There'll be others where we are still waiting for things. So we are still waiting for the government to tell us in our provisional settlement what our numbers are for next year. And that may again affect the risk rating. So because we constantly review this on a quarterly basis, this is just a snapshot in time. And for some of them, we will have to live with the fact that it's red, and we're waiting for something else to happen before it can come down again.
Understood. Thank you.
Any further questions on this part from members? No. Okay, there is an exempt item, but as there's been no change from the last meeting when it was discussed, I don't think it's necessary to go into the private session, etc., and we can move on to the next agenda item. Okay, next agenda item is Treasury Management Activity and Prudential Indicators Half-Year Report. And that's going to be presented by Julian. Thank you.
Thank you, Chair. This is the second quarter report of against the strategy and prudential indicators that the committee would have looked at this time last year. The first quarter was sent out, I think, around August time, and this is the half-year report. In terms of any changes, there haven't been major changes since then. One thing I wanted to sort of bring out is that the capital programme is higher than the estimate. This is due to various items that have been approved since the budget. However, the actual financing is still going to be using our own internal resources and grants where they're available. So there won't be any unfinanced spend, and that gives rise to the potential of a increase in what we call the capital financing requirement. So we'll be using our reserves. There are enough reserves to cover the increase in the capital programme. In terms of all the other indicators, we are in line with them or below the limits where we have to be within limits. Treasury management income is expected to be slightly above budget, or £300,000 on a £3 million budget, and the capital value of our pooled funds is in a positive area because we have to value them against fair value, and they are in positive territory. The property income is slightly below budget, but not significantly. Otherwise, everything is in line with the strategies. If you have any questions, I'll be happy to answer them.
Thank you, Julian. Do any members have any questions? No? Okay, thank you. We are required to note and be satisfied with the comments, the contents, sorry. Do we all agree? Agree. Thank you very much. We'll now move on to item 12, the Capital Strategy Report for 2026 to 2027. And again, Julian, I'd ask you to give your report on this, please, this item. Thank you.
Thank you, sorry, Chair. I've just beg my apologies. My wife's broken down by the roadside with a car and I have to go and rescue her. Unfortunately, I do apologise.
Okay. Best of luck with that.
Sorry. This is the normal strategy that we look at this meeting every year. It's something we have to do following guidance from SIPFA, which we have to have regard to under legislation. Just to say something about the recommendations, they're different from last year because the constitution has changed. So basically, this committee looks at robustness of the actual strategy. And I think the Cabinet is the body that actually recommends to the Council the strategies. Just to say, this sets various indicators and limits, the ones which we've been looking at in the half-year report, and it gives an overall capital finance picture, and it includes all the prudential indicators we are specified to show under SIPFA guidance. It covers capital financing, borrowing limits, and it also covers treasury management indicators, so indicators as to how our treasury management should follow. We've made estimates of capital programme over the next few years and how it will be financed. There is, at the moment, quite a large capital programme expected in the next year. But we are not saying, we are saying we will cover that with our own internal resources, capital receipts, grants, external grants and our own reserves. If we do that, we project our reserves to go down to close to the £6 million minimum level, which we've set ourselves at the end of 27-28. And that's assuming use of all available reserves that we have to finance the capital programme. So there is very little room after this capital programme to use reserves in the future. So there is at that point, obviously our reserves will be down to close to the minimum level. So that may, I don't know if that affects the situation as we move towards a unitary. Expected amounts of cash we have will be reducing in the period to around 37, well, the mid-30s in the end of 27-28. Obviously, there's lots of assumptions in there about capital programme and slippage. We won't be borrowing at all. We are still in the process of looking at a £30 million budget, so there may be slippage. There is some slippage in here assumed because there usually is an amount of slippage, even though we're looking at 30 million as the overall figure. There may be slippage before we get to the final budget. And the final version of these indicators will be going to council with the budget when we have more a firmer idea of what the exact capital budget is expected to be for the 26-27 and 27-28. On the various parameters we set for treasury management, we haven't changed any of the actual criteria we use that are in the appendix. I think Appendix B. There's been no change there in terms of what we invest in and the level of what we invest in different types. There could be a risk to treasury management income depending on what happens in the capital programme, if it is faster than we expect or so, but that would shouldn't be too much of an effect in next year, because obviously there won't be a full year's effect on it. The effect will be on the years after. There's part of this strategy in Appendix C covers our commercial properties. There's no major change in terms of the indicators there, and the level of income is broadly what as we've had historically. We still have low vacancy rates, so we're hopeful that our income will keep up. Obviously, there is effects from the performance of the whole local UK economy, but we expect the income to be in line with what it has been. And those are points I just wanted to bring out, and if anything else, to that.
Thank you, Julian. Members, have you any questions, please? Member Dave Cornfield, it's your turn, Dave. First.
Yeah, thank you for the report. Very well written. Just a question in terms of the capital programmes. Obviously, quite ambitious, larger than usual at 30 million. I know that figure may change. In the event there are overruns and things do happen beyond what one would hope, how much buffer do we have above the 6 million threshold that was set? I'm just thinking, how much space do we have to play with here, or would we be looking to change the capital programme mid-year, depending on how things play out?
I mean, I think we need to look at the programme, because at the moment there isn't, in the theoretical programme we have at the moment, which we are still looking at, and we are still, I think, doubtful about. Well, there's some doubt as whether we have the capacity to do it all in the time we have, but there isn't a fantastic amount of leeway in terms of reserves. I think there are some discussions about use of developer contributions that we have. There are various contributions that may be able to cover some of these, some of the capital programme. But if the full capital programme happens and we use reserves, then we are very close in terms of the approximations at the moment, the projections at the moment, to that 6 million, which we set ourselves as a minimum amount of general reserves.
Yeah, mine was very similar actually. It was about how close that we'll get to that 6 million, and what we will do if we do get too close to it. I suspect actually in terms of capital programmes, they always drag out further than you expect anyway, so I don't suspect we will do, certainly before we become a unitary anyway.
Any further questions? Subject right on this agenda item. Okay. Right, what we've got to do with this one, we're recommended to consider the robustness of the council's capital strategy, treasury management strategy and investment strategy. We're also required to note that Cabinet will recommend to full council the approval of the updated capital strategy that will accompany the 2026-27 budget to council. To note that the Cabinet will recommend that full council approves the treasury management strategy for 2026 to 27 and the associated limits and specific indicators included in section 4 and appendix B of this report. And finally, to note that the Cabinet will recommend that full council approves the investment strategy for 2026-27 and the associated limits and specific indicators included in section 4 and appendix C of this report. Are we all in agreement?
Too, just noting it.
We're basically just noting what's
I agree to
those
note it, yeah.
recommendations. Yeah. Thank you. We've come to the end of the agenda now. Let's make sure. So-
Can I just ask something? Councillor Dennis, just for transparency at the meeting, can you advise us of your declarations of interest, please? Because you came in after those. You do have to do it every time. Thank you.
All right, I do not have any urgent business. I don't think any other officers have urgent business they want to present at this time. So on that point, I will close the meeting at 6. My watch has just died. 6:27.